Thanks.
A couple of other questions that we pre-organised, and I think MK and Gina, I'm going to group those together. There's two of them, and there's also one sitting over in the chat that I think would be great to try and bring all three together. So the generation before us, or the generation gone before us, and I guess I think of my own parents when I think of home loans. It was almost no matter what, we must pay off our home loan. Is it the most important goal? And credit cards, are they a great tool or are they a financial burden? And just over in the chat here, if you could define your point on avoiding debt, since there's many investments that actually require debt. So I suppose when we think of home loans and credit cards, they both involve debt. Or did your information apply more towards, the liability side of things? Sorry, that's a lot.
So maybe I'll touch on the avoiding debt.
Yeah.
When we say avoid debt, basically is if possible, if you have the ability and not to borrow. If you have to, then look at your affordability, meaning your ability to pay back. So if you have the ability to pay back, I think it's still okay, because we already said that once you borrow, you become a slave, to the lender. So we understand that, in today's, situation, it's quite difficult for people to avoid completely. But when you want to take a loan or, go into that, you just got to be very sensible to make sure that it is within your means. Yeah. So live within or under your means, so that you can have enough for savings, enough to pay back your loan. And the other one, the question is about offset account. I would say that if you have money you want to put in the offset account, it will be good if you think that you need the funds, like maybe for emergency. So you want to take a higher loan because just in case you need the funds to do something else. Because when you put an offset in money into the offset account, you basically just reduce your loan and reduce your interest payment. If you can't invest that amount elsewhere that you can get more, then yes, put into the offset account. Because if you put into a pure just deposit, you definitely will be in deficit, because maybe you get like 2%, but your loan is 4%.
That's what put it off directly.
Yeah. So if you want to pay off directly, it's fine. If you do not need that emergency funds aside. Sometimes people put into the offset is because, maybe I want to buy an investment property and then I might need to use that funds. Because once you take a loan, the bank will reassess everything. So if you have the loan, say, $500,000, and you got 200,000 in the offset, and later on you want to use the 200,000, your 500,000, your loan is still there. They don't have to reassess you. But if you just simply take a loan of 300,000 and then you got the money, you use it. But later on when you need it, they have to reassess everything to see whether you can borrow the 500,000. I hope that makes sense.
The bottom line, of course, you don't have to pay interest if you pay it off, but then that means that you have no more money for other things. But if you have some purpose to have that money for something, then you can, then basically you're putting offset accounts, lower interest, but you can use the money as and when you require it.
Yeah, either way, actually your interest, it is not paid, because when you have the offset account, you don't have to pay that interest for that amount.
Can I just add a little bit to that? I think you should look wisely at what you decide to what you're going to borrow money for. I've been buying, if you're going to go out and borrow money to buy an appreciating asset, there's benefits in borrowing money to buy your house, for example. But if, for example, you decide you want to buy a new lounge suite and you're going to be paying for it on a credit card, you're going to end up paying much, much more for that for that dining suite or whatever you're buying, and you're better off perhaps getting something a little less prestigious and paying cash for it, because in the long term you're going to be saving money. It's a bit like borrowing money to buy a flash car. As soon as you drive it out of the showroom, it's going to be worth a lot less, and it's going to continue to depreciate in value, and you're going to end up paying a lot of money for that car. So look, I just think that you should be very wise in what you borrow, where you direct your debt, I can put it that way.
That's great insight, Michael. And yeah, definitely, credit cards can be traps. Gina highlighted the incredibly high interest rates you pay on credit cards, and it's just the old age thing where you feel like you've got the opportunity to take a credit card and you've got that expenditure, but you haven't really because you're actually using someone else's money.
Mm.
So it's an interesting question because, you know, credit cards, I think, work if you're disciplined, and you've got to be disciplined to have a credit card
And that's
or
where
to use a credit
biblical
card.
wisdom comes in for sure.
Yeah, exactly.
Yeah.
Exactly.
Yeah.